Good morning and welcome to the ADS Securities Markets Update. Beginning with the Asian session today, it was a busy session today with a collection of economic releases from Japan and New Zealand, which had a notable impact on the markets, while the US dollar eased some of its gains ahead of the end of the month. Beginning with the New Zealand figures, the building permits came in unchanged with no growth in August. However, July's data has been revised down sharply to a decline of 1.7% instead of a growth of 0.1%. Moreover, the ANZ Business Confidence Index eased back further, posting its seventh monthly decline in a row toward 13.4 in September, down from 24.4 in August. In Japan, the economic outcomes also came in with mixed figures today, but mostly negative. The household spending fell sharply and more than expected by 4.7% in August, which is the fifth monthly decline in a row, comparing to another decline of 5.9% in July, while the estimates were to decline by 3.5% only. The industrial production also came in contrary to expectation, declining by 1.5% in August, comparing to a rise of 0.4% in July, while it had been anticipated to rise by 0.2%, and this is the biggest monthly decline in 2 months. As for the jobs report, the jobless rate, or the unemployment rate, surprised the markets with a decline toward 3.5% in August, despite the fact that it had been anticipated to remain stable at 3.8%, and this is the lowest reading in 2 months. Despite the decline in the unemployment rate, the average earnings eased back to 1.4% in August, down from 2.4% in September. However, the real wages fell at the fastest annual rate, declining by 2.6 in August, comparing to 1.7 in July. The retail sale posted also its second monthly increase in a row, rising by 1.4% in August, comparing to a rise of 0.6% in July, while the estimates were to rise by 0.4%, and this is the biggest monthly increase since April of this year. Finally, in China, the HSBC final manufacturing PMI has been revised down further to 50.2 in September, down from the initial reading of 50.5, while the estimates were to remain unrevised, and this is also the lowest reading since June. Going forward to the European session today, we have a busy session ahead with a collection of economic releases from Germany, Italy, the UK and the Eurozone, which is likely to have a notable impact across the day and across the session. Beginning with Germany, the retail sales is anticipated to rise by 0.6% in August, after a sharp rise of 0.6% or a sharp rise of 1.4% in July, which would be the biggest monthly increase in 2 months as well. The unemployment change is expected to decline by 2,000 in September, after last month's surprises with an increase of the same rate of 2,000 in August. In Italy, the unemployment rate is expected to remain stable at 12.6% in August. As for the UK, or from the UK, the current account deficit is expected to narrow slightly to £16.9 billion in the second quarter of this year, comparing to a deficit of £15.5 billion in the first quarter. And the final reading of the second quarter GDP will be released today, and the estimates are to remain unrevised and to confirm a growth rate of 0.8%. In the Eurozone, the inflation figures will be released today. The CPI flash estimates may decline further towards 0.3% in September, down from 0.4% in August, which would be the lowest reading since 2010. However, the core CPI flash estimate may remain stable at 0.9%. Finally, the Eurozone unemployment rate is expected also to remain stable at 11.5% for the month of August. As for the US session today, there are 3 economic figures will be released from the US and Canada. The Canadian monthly GDP is expected to grow by 0.2% in July, comparing to a growth rate of 0.3% in June, which would be the lowest monthly growth in 3 months also. In the US, Chicago PMI is expected to decline back to 61.6 in September, down from 64.3 in August. And finally, the CB Consumer Confidence Index may decline slightly to 92.2 in September, down from 92.4 in August. However, it remains near the highest reading since 2007. The markets are expected to experience a notable volatility today, as today is the end of September and the end of the third quarter. Therefore, the end of the month flow are likely to show up, which likely also to create notable movements across the day. This is it for today. You can follow us on our social media sites, Twitter, Facebook and YouTube, to get the latest economic releases, reports and analysis. Thank you for watching.